Welcome back. Just want to mention the pressure on the market still hasn't, gone anywhere. We're about 25 to 30 points off the lowest levels of the day. The struggle continues and it's pretty real. And we went into the CII panel, so didn't kind of apprise you of everything else that's moving as of now. It is still banks. They are the biggest culprit. The bank Nifty, after a 1,000+ point decline on Wednesday, is again staring at a 1,000-point fall today. It's very severe, very heavy shorting going on in bank stocks, and a lot of that continues. And, guys, that's the only point that I wanted to make, that all of these shorts have happened going into budget. So a simple sort of scenario is, if it's a no-pain budget, then you'll get the reverse. You'll get the short covering. And let's not forget, the Fed needs to play ball as well. As long as the Fed doesn't provide pain, the budget doesn't provide pain, then perhaps the bulls can heave a sigh of relief. But for now, from equities, we're going to shift our focus to commodities. Manisha Gupta is joining in, and today she is focusing on metals. Manisha, good morning.
Thank you for that, Surabhi. Well, yes, this is one sector that has continued to show very strong gains, even right now, because the dollar index is trading below 100 too, because we have seen very strong US data come in, whether it has been about the fourth quarter GDP numbers at around 2.9%, or it's about US durable goods at 5.6%. And the markets also are reacting to the US home sales, which have seen a second month of a gain. All of those factors really supportive for the metal prices. We anyway have started 2023 with very low inventories. The production curves have continued in Europe. Even as China is reopening, the production hasn't picked up very strongly yet. So all of these factors have been adding premium to the prices. Most of these metal prices are up anywhere between 10 to 25%, whether it's about copper, aluminum, zinc, tin, lead, etc. Especially for copper, which is seen as the one with most favorable fundamentals. That is a chart that is on your screens, which tells you that major academicians and agencies and the producers believe that going forward in the next 10 to 12 years, there isn't going to be enough copper. So starting with the S&P Global itself, and they think 10 million tons of a deficit is what we will be staring at by 2035. Bloomberg puts that number to 14 million tons. Goldman Sachs says 8 million tons of a deficit is what you could see by 2035 as well. But Codelco, which is a major producer of copper in Chile, says that 8 million tons of a deficit, yes, but much earlier at 2032 itself. Until you spend $150 billion as a spread out capex for the next 10 years, the world is staring at a lot of less copper going forward there, and the demand seems quite strong. So this is one metal which has continued to do quite well, and the markets do believe that an all-time high is not too far away in this year as well.
All right, Manisha, thanks a lot for getting us that update from the world of commodities. But with that, we are going to get into a short break now. When we return, we'll get some corporate conversations going. We'll speak to the management of Patanjali Foods to discuss the company's third quarter earnings, which were quite disappointing this time around. So stay tuned for that.